Good morning, federal employees. My name is Dallin. It is great to have you on another episode of Hawes Federal Advisors. In my day job, I am a financial planner helping federal employees just like you get the most out of their retirement so they can retire comfortable and confident. Today, we are talking about how and why some federal employees, when they retire in their first year of retirement, they get clobbered with taxes, right? And often they make an adjustment after that and they're okay moving forward, but often there are some really big hiccups that happen in retirement. And let me ask you this. If you're a federal employee, let's say you're retiring, of course, when you're working, taxes are relatively simple. Maybe you and your spouse are working, so that the only income sources for many of you are your W-2 jobs. Some of you, of course, have rental incomes, maybe another retirement, whatever it is. But for many people, their only income is their W-2 job. So the choosing how much taxes to withhold for the end of the year, for April 15th, is actually relatively simple. You only have those two sources of income, or maybe you're the only working spouse. That's even simpler, right? Just one source of income. Deciding how much to withhold is relatively simple, right? Relatively simple. Now, people then retire, right? And they get their pension. And as they are filling out their paperwork for retirement and their pension, there's a question that asks how much they'd like to be withheld from their pension. And there is a box to check that says, hey, I'd like to withhold about the same amount that I was withholding from my paycheck. And they're like, yeah, that sounds great. It worked out great while I was working. That's got to be the best answer, right? Well, it's not most of the time. Well, it depends. I'll say it like that. Let me walk you through why this is an issue for many federal employees. And this is basically what happens. When you elect the option that says, hey, I want to withhold about the same amount that I was withholding for my paycheck, just the same math there, then this is what OPM does. Basically, they say, okay, while they were working, they had an income of $100,000. Let's say you had $100,000 worth of income while you were working, okay? Now when they're retired, they're looking like, oh, they're only getting a pension of $30,000, right? Their income is way lower than it was in while they were working, so they don't have to withhold very much. Because if their only income is $30,000 from a pension, well, they don't need to withhold very much at all. And if they're married filing jointly, well, yeah, very little, right? So they withhold very little from your paycheck. So when you elect often that option that says, hey, I want to withhold about the same rate that I was during my career, they're not going to withhold exactly the same amount as they were. They're just going to assume that you're still married filing jointly or single, whatever you were before, and they're going to withhold it as if your pension was the only income that you have, which as a federal employee, that is just not the case most of the time. Often, of course, you have your TSP and you may be taking money out of that. You may be starting Social Security. You may have a first supplement. You may have a military retirement. You may have rental properties. You have lots of other things going on. So if you don't compensate and withhold taxes from, let's say, your TSP distribution or some other way so it all balances out, well, then come the April 15th after your first year of retirement, you're going to be surprised that you are not withholding near enough from your pension, right? So this is an issue if you don't, of course, have the funds ready to go. And it's surprising. It's no fun come April 15th when you file your taxes or whenever you do file your taxes at the beginning of the year. It is not a fun experience to realize, hey, I actually owe a bunch of taxes because I did not withhold enough. Now, there is something that is very, very crucial to understand when you're in retirement and trying to decide how much to withhold from the different sources of income. Now, there's one big misconception that I've heard all the time from tons of people that I talk to, and that is the difference between your average tax rate or your effective tax rate and your marginal tax rate, okay? So in the United States, we live in a progressive tax system. Okay, and basically what that means is as you earn more money, the dollars that you earn over certain amounts are taxed at higher rates. Okay, so for example, based on 2021 tax rates, the first about $10,000 as a single individual is taxed at 10%. right? And of course, this is after your standard deduction or itemized deductions. It's after that, right? But as a single individual, up to about $10,000 after that is taxed about 10%. Now, once you pop up to, let's say, the 12% tax bracket, your entire taxable income is not taxed at 12%. The only amounts that are taxed at the higher tax bracket is the amount that goes up into that tax bracket, right? So for example, let's say you have $1 that sneaks up into a higher tax bracket, whether it's a 12%, 22%, whatever, maybe 24%. Let's say you have $1 that sneaks up into the next tax bracket, right? Well, only that dollar is taxed at that higher rate. That is crucial to understand. And one good thing to do is maybe sit down with a tax professional, financial advisor, whoever it is, someone that can help with this, say, okay, what are the different sources I'm gonna have in retirement? And what is my taxable bracket gonna be? And what is my average taxes gonna be? And once you have that information, then it becomes easy to decide, okay, this is how much I should withhold from, when I take money out of the TSP, I should withhold about, let's say 18% or 20% or whatever it is, right? And often the default for TSP is 20%, depending on which withdrawal you're taking, right? And so these are the things to think about is, okay, when you're working, it's kind of on autopilot. You don't have to think about it too much. It's pretty easy. But once you retire, you don't want to have a big surprise in that first year. So you want to potentially sit down with someone, right? And that's something we do for our clients all the time, is to make sure, okay, are you withholding enough from the different sources so that there is not a big surprise after the first year of retirement? And you have to look at all the different sources that you have, right? Even Social Security, up to 85% of that is taxable income, depending on your different sources of income that you have, right? And so you want to look at, okay, what income sources do I have? How are those income sources taxed, right? And if they are taxed, okay, you add those all up, maybe take a standard deduction out. What tax bracket are you in, right? And once you figure out, okay, maybe you're in the 24% tax bracket, right? Well, okay, if you're in the 24% tax bracket, then that means for every extra dollar that you make, you're gonna be in the 24% tax bracket. Unless, of course, you pop up to, let's say, the 32% tax bracket, right? Whatever it is. But that's useful information to know as well. So for you, an action item for today's video is, okay, if you're approaching retirement, maybe add up all the different income sources that you're gonna have in retirement. What does that number look like? How much of that is taxable? And is that gonna be close to what you're paying now in taxes, right? And that is a great exercise to go through. And maybe sit down with your accountant or a financial advisor, whoever it is in your life that can help with this. Sit down with them, say, okay, how is this gonna work? What should I do to make sure I don't get killed in the first year in taxes? So you withhold enough and there's not a big surprise come April 15th. So I hope that was helpful. If you have any questions yourself about anything when it comes to your federal retirement, taxes, investments, insurance, estate planning, all these things we talk about here on the channel all the time, there's a link in the description below to submit those. And I look through all of those and we find the best ones to answer on the Q&A every Saturday. And so feel free to put your questions down there. So I hope that was helpful. Have an incredible rest of your day. We'll see you next time.